gentlemen, welcome back to Finance Tube, and today's topic of discussion is very controversial. We are saying why to have a home loan and never make an early payment to it. Are we serious? Yes, we are very serious. Friends, a home loan is the cheapest loan that you can take on this planet Earth. Let's talk about situation in our country, India. In India, home loan is available anywhere between 10, 11 and 12%. Now, what happens when you take a home loan? A, you get a home, of course you do. Second, you have to pay interest, let's assume 12% for the sake of simplicity, per annum. Now, on this 12%, the first benefit that you get is tax break. Actually, it's the second one, but let's take it as a first benefit. Tax break. How does a tax break help you? Assuming you are in a 30% tax slab, you save straight 30% of 12%. 30% of 12% is roughly 3. So your post-tax interest cost becomes single digit, that is 9%. Now 9% per annum is the cheapest money available in the country. If you were to go out there and ask a money lender how much will you charge for a loan, he would say 18% or 1.5% per month. We in our native language call it Thakkar. So, a single digit interest cost. Compare that with inflation, which is always double digit. In my previous videos, I have explained that how inflation is calculated wholesale price and consumer price, and if you take the 2005 figures, which is quite old now, from 2005 till 2014, we've seen that inflation and especially consumer price inflation is in double digit. Now, why is inflation a benefit and not a cost? Because you are borrowing and not lending. When you borrow money, let's say 100 rupees from a bank, you are getting some purchasing power worth 100 rupees. When you repay this money to bank along with interest, which is single digit, you end up repaying much less purchasing power than what you got. Why? Because this double digit inflation erodes the interest benefit of the bank. That means you are better off borrowing in scenarios where economy is reporting a double-digit inflation. So inflation plus tax break. Also, there is a negative opportunity cost. It's actually a benefit and not a cost. Because if you were to put your own money to buy a house, I am sure you would not invest your own money at any place which would give you single-digit return. Because your money itself is very expensive. If you ask me what is the cost of your money, simple. The cost of your money is inflation. Every year, 100 rupees that you just keep in your pocket loses the value. The purchasing power of your 100 rupees goes on reducing day by day, which I am sure you experience it on a daily basis. So it makes more sense in putting borrowed money in buying a house rather than your own money, because your own money has an opportunity cost. So when you put together these three benefits, it makes a lot of sense to at least have one housing loan per family and just continuously pay the EMI and never think of early payment or prepayment, because that actually helps you to insure yourself against inflation. Because you are using bank's money, you are better off. So, a saving which is diverted towards a home loan EMI is actually more productive than a saving which is put in FD, because FD gives you single digit return. And I have told time and again in my videos that there is tax of 30% on FD. So FD gives you a miserable return of 5.6%, whereas here you would have 3 to 4% of saving on the inflation itself. So it makes sense in taking a home loan, just because A, it is the cheapest loan available, B, the opportunity cost is actually negative, and C, you save tax and have a hedge against inflation. My question is very simple. in this entire transaction, how do these three people make money? A, the bank whose credit card my friend produced and swiped at the showroom.